and welcome to On Deadline. I'm Dennis Owens.
I'm Amanda St. Hilaire.
And I'm Kendra Nichols.
If you're listening for the first time, we're journalists for ABC 27 News in Harrisburg, Pennsylvania.
But on this podcast, we talk about issues that affect people all over.
These are the conversations you don't hear on the news. We're different generations with different experiences, so we don't always agree.
But we do get very personal, get very real, and hopefully get you thinking.
We are recording on Monday, February 12th. 2018. I keep saying 2017. Still,
Lincoln's
I'm a month
birthday.
behind.
Oh, wow, really?
Oh, nice little piece of trivia. Today we are talking about your future. And no, we don't have any crystal balls, but we are talking about what you need to know about the stock market. We're starting from scratch, how it works, what the heck's been going on lately, and what you can or should do about it. Then we're talking about restaurant inspections in Pennsylvania, your questions about food safety answered. But first, the stock market.
The what?
Bill Parker, CEO of GrandView Asset Management, is here to guide us through what we need to know. And Bill, I understand you are good with numbers and words because you have made a lot of appearances on national media.
Yes, I've been on CNBC, Fox News, CNN. I have a syndicated show on Friday afternoons, and I'm also on a local radio station.
And
But
based
this
in
is clearly
Harrisburg, right?
this is clearly his biggest gig.
Yes, the appearance on Deadline.
You have made it. Okay.
So when I say we're starting with basics, I mean basics. Can we start off just by explaining what the stock market is?
Well, it's strange that you asked that. Really, it's a market of stocks.
Really?
It's the inverse of that. Yeah, it's really the inverse of that. Most people don't understand that. For the most part, it's a basket of stocks that people invest in companies that have gone public, and basically each stock has its own PE ratio of what it's trading at based on its earnings, multiple of earnings, and there are other factors that go into valuation of a stock, like a beta ratio, alpha, and so forth, that people that manage money look at to decide whether a stock is either overvalued or undervalued. But in this past week, none of that really came into play.
Well, let's talk about this last week. What the heck happened?
Well, it's very interesting. On Tuesday, we needed a pullback, first of all. And what we saw on Tuesday was computer selling. And computer selling, there's a lot of computers that manage a lot of money, and they watch algorithms. And when they see things go haywire, they automatically start selling. And matter of fact, I think we ended at the 100-day moving average to the penny on Tuesday of last week. And humans,
wait a minute, time out.
humans
Can you
don't do
explain that?
Yeah, what
Humans
does
don't
that
do
mean?
that. Well, there's a 50-day moving average, a 200-day, a 100-day moving average of how the market's moving up. And that also applies to stocks as well. Stocks have 100-day moving averages and 50-day moving averages. And usually when it goes down or below or breaks below that moving average, those are seen as support levels. What I saw on Tuesday last week was really computer selling. What started it was these ETN, exchange traded notes, which trade 3 times the upside or the downside of the market, which I really clearly don't understand why the SEC allows it. But literally, imagine if you could go to a horse track and bet on a horse that could run 3 times faster than any other horse. It's not possible. And people were buying these exchange traded notes that were trading to either the upside, 3 times the upside of the market, or 3 times to the downside of the market. So at the end of the day, Tuesday, some of the ETNs went out at $92 a share, but most people don't understand that the market after 4 o'clock continues to trade. There's trading after hours, and after hours, that one ETN dropped from $92 down to about $3. In a matter of 30 minutes after the market had closed.
Why do they ring a bell and everybody applauds whether the market went up or down at 4 o'clock?
Right.
Well, that's the official close for, let's say, most people trading. But if you watch the most, and I predicted this 8 years ago, that eventually we would have 24-hour trading, and TD Ameritrade does.
Okay, so, and we started to talk about what happened last week. I don't think you really can talk about what happened last week without talking about what has happened for the last year since Donald Trump became president, where the thing took off, right?
And
the
how
markets
much
took
credit
off.
the president,
regardless of that,
really
but the
can
numbers
take
went
for the
way
stock
up,
market.
regardless of who's taking credit. But
You have to understand that most companies were beating their earnings. Approximately about 75% of the S&P 500 were not only beating their earnings on the bottom side, but on the top side of what they had projected.
And when you say beating their earnings, what do you mean?
Well, let's say they were going to come in at $1.12 per share, and they came in at $1.78. or a $2. So they beat their numbers, and they beat their numbers on revenue, and then they guide their expectations for the next quarter up or down, depending on what conference call you're listening to. So conference calls usually take about 2.5 hours. Really, the relevant information in a conference call takes place in the first 20 minutes when the CFO and the CEO are talking, and then usually in the last 20 minutes when analysts are asking the very difficult questions that they don't want to answer.
Kind of like interviews with reporters.
Yes, it is. So, yeah.
Let's go back still. So what has gone on for the last year? Now, and just for perspective, I believe we didn't hit 1,000. So from the stock market crash of the 1929 era to 1972 before we ever got to 1,000, right? It took 50 years roughly.
Well, you have to understand that most people in the 70s, there weren't a lot of mutual funds at all, Dennis.
Right.
You had a handful of mutual funds. So most of the people that were trading in the market were trading in stocks and individual bonds and individual treasuries. It wasn't until really that 401ks and IRAs and those things came into place that the average person that was trying to save for retirement, because I think the government knew that Social Security wasn't going to last forever. So they started these retirement plans like 403bs, 401ks, and so forth. So then the average person could take some of their money and putting it into an investment account. And then the mutual fund universe between 1980 and 1995 exploded from approximately, let's say, 500 to over 15,000.
But my point was that the market didn't get to 1,000 for almost 50 years, and now from the 70s till now, we're up to what? 26,000 or 25?
We're around 23, 24, 24. Okay. So, yeah, there was you have to understand that America as a country really took off after World War II. And you saw manufacturing jobs, and you saw large businesses like IBM and so forth come into play in the 80s and the 90s and so forth. So you really saw technology and other industries start to take off that hadn't been there in previous decades. So you had now more stocks in the market to choose from, and then you had this whole idea of technology where I can remember when we got our first microwave, my mother was scared half to death of it. But then by the time we went on vacation, she actually forced us to take it with us. And we got 300 pounds. So technology has really, from a standpoint think about our phones. Our phones right now are more powerful than NASA was when they sent the shuttle to the moon the first time.
That puts it in perspective.
So there's more power in your phone than that actually sent the man to the moon. And remember, even going back to 1994, I was listening to an interview today about Olympians that walked into the 1994 Olympics. They didn't have cell phones. They didn't have selfies. There wasn't a social media. They didn't have Facebook. There wasn't Snapchat.
No one was making duck faces.
No.
Yeah, now it is a part of our life. We have everything in our phone, and that's very good. There's also a part of that that's scary. If you basically take out your SIM card, put your phone on airplane mode, and you, let's say, travel around Harrisburg for the next 4 or 5 hours, and then put your SIM card back in, Google tracks everything you do, even though your SIM card's out of your phone, and then uploads it. So even though they say it's free, we actually become a victim of the internet in the sense that they track everything we say or do, where we go, how long we were at the hospital, what hospital we were at. I mean, it's very interesting how technology has changed.
It's when you pull in a parking lot and you get all of a sudden you get a coupon for that store because they know you're there. That's always creepy.
Well, and that plays into the stock market.
Right. Which other things, that leads me to my next question. What kind of things do affect the stock market? Can big weather events affect the stock market? Can wars? I'm just kind of curious what all goes into how money is being traded. I mean, I'm sure if a big weather event happens and it affects a company, it could affect the stock market.
Well, there's a couple of things that affect the market. It's technically, usually interest rates, inflation, commodity prices of commodities, and so forth. We have the CPI and the PPI coming out this Wednesday, the Consumer Price Index, which is really the cost of, let's say, a consumer buying a basket of goods. How much is it costing us? Are we starting to see inflation? And some inflation in the market is actually good. You have to remember that we have been in very low interest rates for a very, very long time. And what most people don't understand is that the government refinances its debt every several years. It's not like the government has refinances its debt for 30 years, although they've been calling for Trump to do a 50-year bond for infrastructure, which I think would be a great idea. Right now, in 2018, the first $300 billion in tax revenue that's collected will go towards interest only on the debt that we own. In 7 years, it'll go to $700 billion. In 10 years, it'll be $1 trillion. So the first $1 trillion worth of income that comes in, I shouldn't say income for the IRS, it's our money, but the first $1 trillion that goes to the IRS will actually just pay for the interest on the debt we have. So the reason Rand Paul and several other people stood up and said this is too much is because there's going to be a tipping point where there's not going to be enough income from the government's perspective to pay our bills. And you can't tax your way into prosperity. Rome tried it, didn't work out. Okay. It's certainly not going to work out in the United States. So the big fear over the long term is inflation. And the government, what the president is trying to do is saying, listen, we're going to increase GDP, and GDP is going to bring in more tax dollars, and that's going to help us pay for some of the money. And he's also talking about $1 trillion infrastructure bill, which probably will be a $300 billion or $200 billion government spend, and then a private-public partnership with businesses of about another $700 billion.
One of the things that I've been hearing over and over the last several weeks is the economy is not the stock market and the stock market is not the economy. They play into each other, but just because the stock market is going up and down, that isn't always a reflection of what the economy as a whole is doing. Do you think that's a fair assessment? And what should we know about the relationship between the two?
Well, we haven't had wage inflation in the past 9 years up until the last quarter. It was expected to be 2.6. It was 2.9. And the reason you didn't see wage inflation in the last 8 years is that employers were paying a lot more for health care. So rather than actually increase the wages, they were actually paying more for health care. The problem that we have with wage inflation is going to grow. And here's why. We have 4% unemployment. We have the lowest African American unemployment. We have the lowest Hispanic unemployment ever in the history of the United States. If Chrysler and Kia and other people are bringing factories back to the United States, and Apple's bringing 100,000 jobs back to the United States. The 4% of the people that are unemployed right now are people that can't work because they're disabled or intellectually disabled. 2, they don't want to work. 3, they're uneducated. And 4, they're unskilled. So if there's going to be an economic expansion in the United States that the president's talking about, where are we going to get people to fill these jobs? So what happens is that the employees, and this is why millennials are so transient. They have apartments and they don't
yes,
have homes.
We are.
Okay, they don't own homes because they don't want to mow lawn. They don't want to shovel a driveway. But more importantly, it's true.
I don't mow the lawn, but I do shovel the driveway.
They don't know the difference between a Phillips head and a flathead.
And they don't want to
Hey, I do know that.
I'm saying most. I'm maybe younger than you. Okay.
All right.
And they don't want to have to pay for it when the pipe bursts. Which is
No, they don't want to pay property taxes. I get it. But you have to understand that they're going to be in the driver's seat over the next 5 years because they're going to be able to pick where they want to work, such as, let's say, Nashville market, or let's say the Tampa market, or let's say the Austin market attracts them. And they're going to get paid just as much, if not more, in a marketplace where maybe taxes are lower, and they're going to get paid more money because employers are going to have to pay more money to keep people on staff. If not, they're going to be transient. They're going to move. And that's because there's not enough people in the marketplace to be hired. And that hurts margins for companies, because when companies have to pay more for employees, obviously they make less revenues.
Here's what I don't understand. So to the average person, and it dovetails on Amanda's question, to the average person, the fact that wages, it appears, had finally started to move up after stagnation for a long time.
9 years.
The market's immediate reaction is to sell off, and oh my goodness, because they fear now that's going to cause inflation, which is going to cause the Fed to raise interest rates. So that gets back to the market is not the economy, and the economy is not the market, because the market rewards companies that lays off people and gets more streamlined and tightens its bottom line or its belt. which is not necessarily good for the economy if you're the person who got laid off. They're kind of getting to the difference between the market and the economy.
Yeah, they're two separate things. And the economy is doing really well, and the stock market's doing really well. We needed a pullback. Actually, really, as we're recording today, the S&P 500 is only down 0.9% for the year. So this big sell-off we saw on Tuesday, people actually moved to the 10-year bond, and the reason I knew that is that the 10-year bond started about 2.8 on Tuesday afternoon. It dropped to 2.7 late in the day. That means people were looking for safety. On Thursday, when the market sold off 1,000 points, actually the yield on the 10-year went up, which meant people went to cash. They weren't looking for safety in the 10-year bond yield. So people moved to the sidelines on Thursday. That set up for what's called a double bottom on Friday. We had a 23,500, which hit on Tuesday on the Dow. We retested that low on Friday, and when we did, buyers came back into the marketplace and the stock market went up. It could have happened for two reasons. One is we had a double bottom, and the other is people short stocks sometimes, and in order to short stocks, if they want to stay out of trouble, they have to buy them back in order to cover their positions. So it could have been margin calls on Thursday that caused the market to sell off, and it could have been short covering that caused the market to go up on Friday.
Okay, you lost me at double bottom and short stocks, but but at any rate, so last week was very volatile. In general,
or it felt volatile.
It will, and it's going to continue to be volatile. I mean, we're not going to see another 2017. It was like a fairy tale last year, which just went straight up. I mean, we were breaking through 1,000-point numbers, in a 1 week period of time, and now we're breaking 2,000 points on the way down. This volatility is not unusual in the marketplace. We didn't have a 3% or a 5% pullback in the market in 2 years, and that's unheard of.
What should the average person? Because a lot of this is going to be over most of our heads. I'm following you sometimes, and sometimes I'm like, I don't know what's happening. So what is the average person? What are the two things that they should look out for or care about or use as a gauge? Give us a little bit of advice here for the...
for the stock market,
the majority of us.
Well, it really all depends on your time horizon, how long you're going to stay invested in the market. If you're 30 or 40 years old, or even if you're 50 years old and you have another 20 years in the market, you're going to see times like this when the market sells off 2,000. And remember, 2,000 points or 3,000 points, put this in perspective. We are where we were right before Thanksgiving. And at Thanksgiving, everybody thought the stock market was great. Everybody was hooting and hollering about the stock market. Even the president was, and we're back to where we were on November the 17th. So the reality of it is that the market's still up from when the president took over. We're back to where we were in November. We sold off in December. We had a very big January. That was all taken back. So if you're a long-term investor, I think you're going to be okay over the long term. The thing that scares me the most over the long period of time is the debt that we see in the United States under President Obama, and now the increase under President Trump. The debt service that we have to pay to other countries is it's going to be impossible for us to pay it unless we raise taxes in the future, or unless we can grow our way out of it. And certainly that's a possibility. I think there's certain sectors that will do well over the next year, because when interest rates go up, usually banks do well because they make more money. When you have a president that says he's going to spend billions of dollars in aerospace, you have aerospace companies that do well, because not only are companies selling aerospace and technology to our country, like the Lockheed, the F-35 fighter, defense systems, and so forth, they're selling it to other countries. They're selling it to Norway, Switzerland. Other allies are buying our defense systems. So it's not just our markets; it's other markets that are investing in the United States. And you have to remember, last year the dollar went from $1.04 down to 90 cents. So that made it a lot cheaper for other people to come in and buy our products. But it also made it more expensive for us to buy things. So there was an inverse, because the euro, I forget what it's at. I think it's at $1. It's above $1.30. So it costs you almost 30% more to go to Europe right now and buy something. And it's a lot cheaper for them to come here and spend money than it is for us to go over there right now and spend money.
It seems like if the stock market is doing well, the party in power wants to take lots of credit and the party out of power says nothing to see here. And if the stock market is doing poorly, then the party in power says nothing to see here. And the party out of power says, hey, this is a big problem. At any given point, how much can a president or lawmakers take credit, or how much blame should we give them for how well or how poorly the stock market is doing?
Well, President Trump unwound over 800 regulations, and that's very positive for businesses. Then he actually came through with a tax cut, which is the largest tax cut we've seen since the Reagan administration. Remember, 2/3 of the money's overseas, and we're talking about trillions of dollars. They're tied up in 8 companies. One of those companies brought their money back, and that was Apple. Apple brought their money back a month ago or so, or sometime in January. I guess it was in January.
And when you say bring it back, what do you mean by that? I mean, are there guys in an airplane with suitcases, or
no? They transfer the money.
Happening?
They transfer the money from their banks over there to the banks here,
and then pay taxes on it, or
yeah, they're going to be paying tax at a lower tax rate than what they may have been paying overseas, and they invested $350 billion in the United States. It's the single largest investment any company has ever made in the United States, and they said they're going to hire 100,000 people. So if the other 7 companies bring their money back to the United States and they repatriate those trillions of dollars back to the United States, that's a great thing for our economy. The thing that scares me the most is, where are the employees? That's what I just don't see. I don't see a lot of unemployed people out there, and if they are, they're not unemployed they're unemployed for a short period of time.
What's the biggest thing as we wrap things up here that people get wrong about the stock market, or that you wish you could change about how people thought about the stock market? Especially people like us who are not nearly as well versed as you are.
Well, first of all, panic is not a strategy. So whenever you see blood in the street and it's red, the last thing you want to do is sell low. And that's a big mistake people make. They panic and they
just want to get rid of it.
Oh, this happened in 2007, 2008. People panicked. They never got back in. And if they did get back in, look at it. The market went from 6,000 some odd points to 26,000. So they never got back in. They missed out on a quadrupling of their money if they were fearful at that time. And there was a lot of fear at that time. Banks were going out of business. Brokerage firms were going out of business. Bank of America was forced to buy Merrill Lynch over the weekend. So panic is not a strategy. And during your lifetime, you're going to see several pullbacks. This is not the big one like it was in 2008.
Right.
At least I don't think it is. There's nothing systemically wrong in the marketplace right now that's going to cause that to take place outside of pension failures, very high inflation. We see very quick inflation take off. That could certainly send us into a recession. But generally, when we see these sell-offs in the marketplace, we see such a big gain and then a sell-off. The preceding 6 months, historically, looking back over the last 30 years, the next 6 months is about 6 to 8% on the upside. It's not very big. It's not very much historically.
I'm kind of the opposite of panic. I'm placid. Okay, so I've been saying to you, I put as much money as I can in and forget about it, and say to myself, I'm not going to touch it for a long time. It's going to go up, down, up, down,
Right.
up, down, up, down. But at the end of the day, when I'm ready to need it, it's going to be there. Is that
that's what I do.
wise? Or I'm hearing millennials now not getting involved at all in the stock market because
that's wrong. I mean, right now at their age, they should be investing.
That's what I say.
This is the time.
Yeah,
Right.
Especially
You got all the time in the
in
world.
technology and aerospace and some other things. Robotics. I don't know if you've been watching Olympics, but there's robots all over South Korea. Robot skiing, robots. There's all kinds of things that are taking place. So robotics, not only when it comes to surgery, but other types of robotics when it comes to defense systems and unarming certain things, let's say a bomb or so forth. So we're seeing, you have to understand this too, Dennis, is that the world is melting up. China, India, second world countries are becoming first world countries. They have highways and hospitals and technologies and cell towers. They didn't have that 10 years ago. So you see the entire world growing. Now, the entire world did sell off about 11% last week. That being said, we still see growth in China and India and other countries.
All right. Thank you, Bill Parker, CEO of GrandView Asset Management. Thank you so much for walking us through what we need to know.
I hope there's not a test.
So we do this little thing every week called Restaurant Report. And in Restaurant Report, we publish the food inspections in Pennsylvania establishments. So often restaurants, sometimes schools. And since we started doing this, at this point, almost 2 years ago, we have received many, many questions about food safety in Pennsylvania. So this week, we answered several of those questions. We went to Pennsylvania's Department of Agriculture, which does the food safety inspections in restaurants. And the number one question that we always get is, how do these restaurants with so many violations stay open? And I know, Dennis, you always talk about how you have a restaurant background, and some of the stuff that you see every week doesn't necessarily surprise you.
No, if you've worked in restaurants, there's some roaches here and there or some of the stuff.
Yeah,
I mean,
that's just
You
part
say
of
that
it.
so casually.
Well, no, it's true. If you ever worked, I worked in the restaurant business.
I worked in multiple restaurants.
And it's part of it.
Exactly. So we went and asked them a whole bunch of questions, and they walked us through how their inspection process works. So basically, they have trained food inspectors, and it is quite a process you go through it's a science. It's food science that they're doing over at the Department of Agriculture. And they'll go out to a facility at least once a year. If you have good inspections, you'll probably only see them once a year. And they will go through the PA food code. And
do they give the restaurants a heads up?
No,
hey, we're going to come in the next couple of weeks, or we're coming between this week and that week?
They are unannounced inspections, but you can generally figure out kind of a 2-month window of when you're going to get inspected, because it happens around the same time every year. So you really don't have much of an excuse, because if you've been open for a while, you generally know when they're coming. Every restaurant is required to have someone who has been certified in food safety through a Department of Agriculture approved program. So a little more than a year ago, I actually went through and took one of those courses to see all the different things you learn. So the inspector will go through, and some of the violations can be bigger ones. You think roaches, rodent droppings, mold. A big one we see at facilities with lots of violations is person in charge does not have adequate knowledge of food safety. You see things with dust and emitting dirt into the air and all that jazz. Hopefully you're not eating while you're listening to this podcast episode. I've developed a very strong stomach. I can eat lunch while going through the restaurant inspections at this point. But then there are smaller things that you wouldn't think are a big deal, but they actually could cause serious foodborne illness. So if you are storing raw chicken above ready-to-eat vegetables, that location of things being stored, but the juices from the raw chicken can then contaminate the ready-to-eat food, and then you're eating raw stuff, and then you can get very sick.
Seems like common sense.
Yes, it does. One would think, Kendra. Yeah. One would think. But you have restaurants who over and over have all these violations. So if they are found out of compliance, which is a little more of a subjective thing, you can have 3 violations, but they're 3 big violations and you're out of compliance. Or you can have 10 violations and be in compliance if they're all minor things that can be fixed on site. If you're out of compliance, they're going to follow up again. And usually it's within the next couple weeks, and they'll do a reinspection. And if you've fixed everything, then great. If you're still out of compliance, they're going to follow up again. And this time you're going to pay $300. And this is so that it's not costing tax dollars to keep inspecting your facility. And then after that, you're going to pay $150 every time they come out. And if you're still a problem, they can take you to court. They can go through and get civil penalties up to $10,000 per violation. They can file citations with the district judge's office. And the idea is that they're not necessarily trying to close a facility, although they will if there's an imminent health hazard, if there's a sewage problem, if there's an infestation. Sure. But they're trying to fix these violations. So that's why if you can have a restaurant that's been, out of compliance 12 times in the last year, well, why isn't it permanently closed? According to the PA food code, that's not the job or the point of the inspections. Mm-hmm. So that's those are some of the common questions we get about how all that works.
And Pennsylvania government things a lot. It's the philosophy, the overarching philosophy is it's not our job to do that. It's our job to inform the public and let the public make their decisions.
Right.
Although how much of the public's actually looking at these things?
You'd be surprised.
I think that and you and I both worked in the restaurant industry. Owners want their places to be clean. They want people to come back.
Yes.
So I think majority of your owners are doing everything they can to handle the insect problem, because I'm sorry, people, every restaurant has an insect problem. It comes with the business. I think most owners are doing everything they possibly can. I think what grosses me out more is when I see a bartender or a waitress rub their nose and then touch the top of my cup.
Yes, not
that grosses
properly
me
washing
out more
hands,
than
not wearing gloves.
there was a rag where it wasn't supposed to be. I'm like, ew, you just rubbed your nose and now you touched my glass. That grosses me out more than they didn't have the right concentration of bleach in their
Now, and it's tough because it's a combination of safety. You want to enforce safety, because if the bleach concentration is too high, you can contaminate people's food and they can end up in the hospital if raw food touches that and then you eat it.
How often does that happen?
Right.
That's what I want to know.
You'd be surprised.
Do we have documentation of a lot of people getting sick? I'm just curious.
Well, the difficult thing with that is a lot of times when people are sick and they're thinking, oh, what did I eat in the last day or in the last 2 days? Foodborne illnesses can fester for 6 weeks before you show illness. At least that's what they taught in this food safety certification course.
So there's no way of really knowing.
So there are a lot of outbreaks that are probably food related that haven't been traced back. It's why all the stuff that happened with Chipotle, do you remember that? It took so long to pinpoint that because that stuff was festering for weeks and they had to do a lot of detective work and so many people were getting sick. And then eventually they said, oh, it's this problem.
Yeah, it was like E. coli or lettuce or something.
They've had a few issues over the last few years.
Just to get him the transport machine and go back to the restaurant I worked in on a Friday night when you've got a line out the door and you've got 8 or 9, 16, 17, 18, and 19-year-old guys are the ones who are cooking for you. Okay,
and great things to happen.
That's exactly right. But everybody got served. But at the same time, there was some crazy stuff going on.
Oh yeah, absolutely.
And I do want to point out, and I appreciate the people who are vigilant about food safety. I think that's great. But there are certain things that I think people sometimes think won't be allowed, but they are. So I'll get an email saying this person was rolling out pizza dough and shaping pizza dough with bare hands. Well, they're allowed to do that because it's going into the oven. It's going into the oven, yes. So those germs are going to go away. It's if they're touching ready-to-eat food with their bare hands that's a problem.
And I've made thousands of hoagies with my bare hands.
Oh, yes.
I'm sure back when I did it, but I guess these rules didn't apply then.
Right.
I think another big thing that, again, is when people are handling food and handling money. I think that's kind of gross.
Yes, that's a big no-no. That's a really big no-no. But the folks at the Department of Ag say they're happy we put this stuff on TV because just putting it out there in the public, that's more effective than any fine that they could impose.
Sure.
Because then people's names are out there. And we do list the ones who had no violations because that happens. There are several restaurants in our area that frequently have no violations.
Which is great.
So it's not this impossible feat.
And it depends on each person. Listen, I worked at a restaurant once, very nice place. I'm waiting on the people and she mumbled something and I'm like, what? She's like, there's a roach on the table. She picked up her spoon, killed the roach, handed it to me, and I was horrified. I was like, we're going to give them free food. They wanted nothing for free. They were like, not a big problem. Now, you'd have somebody else that would be like, that's it. I'm done.
I'm done. Yeah. I'm reporting you to ABC 27 News.
Right. You're going to be on Restaurant Report. It also, I think it depends on who is, you know, who your customer is.
Yeah.
I think it's a good thing that we have it, but I do understand why people get confused and they see the same place over and over.
Right. Yeah. And I think the way the Department of Agriculture explained it was perfect. You know, they said if it doesn't fall into that category of imminent health hazard, the way the PA Food Code is designed, you know, our job isn't to decide who gets business and who doesn't. Our job is to keep people safe. Yeah. And if we can help you, and the inspectors really are almost teachers, if we can help you and we can teach you and we can bring your restaurant that is serving delicious food into compliance to keep people safe, then everybody wins. So we don't have any comments for our typical A Word From You segment, but Kendra, you got a lot of feedback about a recent story that you did about street sweeping.
Right. We actually had a lot of comments, but they were all over the place. So we were contacted by a viewer who received a ticket in the city of Harrisburg. She parked on Capitol Street during street cleaning. It was posted. The sign was there. She says, I admit that. I paid it. What she was frustrated about is after she got the ticket, she was like, there was no street cleaning done here. She made some calls. Street cleaning is suspended, had been suspended for 2 months.
So they, as a matter of course, do not sweep the streets for 2 months.
For 2 months.
But yet they're enforcing the street sweeping.
Right. So she still got a ticket for $30. And she was like, why am I getting a ticket for $30 when you're not even street sweeping and you know that it's suspended? So we looked up the Harrisburg ordinance. They can still enforce it because they say they could also use that time for other maintenance work, tree trimming, snow removal, things like that. So we did a story and we checked with other local municipalities. Everyone handles it differently. I will say that.
That's always fun.
Yes. So there are some cities like York, they will not ticket if street sweeping is not happening. But then we had people who said it's posted, don't park there. And they need to, I can understand where the confusion could come in. But if you know, in this day and age, in the world of text messaging, tweeting, you could say no street,
to me, it's nonsense. The city of Harrisburg, that's nonsense. The bottom line is if you're not sweeping the streets, you don't give a ticket for street sweeping.
Tell us how you really
There's always
feel,
these
Dennis.
law and order people that say, oh, there's a sign. Well, the sign is put there by the government. The government's a representative of us. And we collectively can say, that's nonsense.
Yeah.
You're not going to do that.
Did you recently get a street sweeping ticket? Is there something you need to tell us?
I lived in Midtown Harrisburg, and I had probably 4-inch thick of parking tickets every year. So, yeah.
So I think I can see both sides of this, but our viewer was like, I think it's an ethical question. If you know it's not happening, why do you, and now for me, we asked them how much money.
This is my favorite.
And they told us it wasn't relevant.
No, because it's a money grab on their part.
So,
that's exactly what it is.
We have filed a right to know to get those numbers. We also filed a right to know to get the maintenance records to see if any other work has been done. I just took a quick glance at it. They said that they don't have the dates of when the maintenance work was done. So we'll look into that a little further. But it got mixed reaction. People on both sides. We're still looking into it, but I think it does raise the question.
Yeah, go get them. If you'd like to check out the links to the stories, articles, and videos we discussed, you can find them in our show notes on our website, abc27.com. To get On Deadline delivered directly to your phone, tablet, or computer each week, subscribe in Apple Podcasts or Google Play Music. Record your thoughts, questions, and suggestions about episodes in voice memos on your phone. We'd love getting those. Email them to us at theinvestigators@abc27.com. Please take a few minutes and leave us a review in Apple Podcasts. It helps our podcast reach other people, and it helps us figure out what we can improve. Thank you, Eric Semmel, for producing this podcast, and Jason Dietz for composing and recording the music. It's time for us to go. We're on deadline.
Double bottom. What's a double bottom?
A double bottom is where the market goes down really fast, and at one point or another, computers or people start to say at 23,500, we're going to buy back in. We're going to buy hand over fist as much as we can. So the second day is a dead cat, what they call a dead cat bounce. It's just that this is historically what takes place in the market. The dead cat bounce is the market hits, it bottoms. The second day, Wednesday, the market was up. It was up 500 points. It was called a dead cat bounce. That's.
We're definitely putting this in, by the way.
No, I'm just telling you the way it works.
Yeah.
And then usually on the third day, there's another sell-off. Now, if that sell-off hits the previous sell-off on Tuesday, the 23,500, in that it hits that second bottom, and then we see buyers coming in at that bottom again, buying, that shows a resistance level, that there are buyers at 23,500 that are willing to come into the marketplace and buy stocks hand over fist. That double bottom, not to say that it won't be retested, but usually it's a very positive sign when you have a double bottom. It's also the inverse. When you have a double top on the stock market, let's say that it's
a living cat bounce.
No. Let's say we were at 26,500. Okay, we were at an all-time high, no doubt about it. But let's say we go back to 26,500, and we don't get through it. during interim trade, during the day, and it hits that, and all the computers start selling off because they know it's a double top, you're going to see the market sell off. Now, once the market breaks through that double top, and eventually it'll break through that 26.5, whatever the high number was. That's what's called a flag. That's a very or a candlestick, depending on who you talk to. That's a very positive sign that we've broken through the upside of the market, and that is going higher. Okay. So it trades in a channel. The channel is the upper side of the bottom side, and the bottom side does it break through the 23,500? And if it does, that's very negative because we don't know where the next resistant level may be. You understand it because it's broken through the level. It's hit it twice, and on the third time it's broken through it. That's when you see a lot of computer selling. So that's kind of maybe a 5-minute course on double bottoms and double tops.
See, we like the conversation so much we kept it going. Thanks, Bill.
Thank you.